guys, I think we're live. We do this every single time, right? It's always the same thing.
We never really know.
And we're just staring at the screen, talking kind of weird. We're live.
Blank.
Hey, everybody.
Blank for nothing.
It's time. There you go. It's time for the Investing Unscripted live from Omaha. First Friday. It's actually Saturday. Hey, Jeff.
Hey, how are you?
I'm good. Hey, Tyler. What's up, man?
Hey, I think I can hear you down the hallway.
Yeah, I feel you should close your door there. For those that don't know, we are in Omaha. We're not anywhere special. We're in an Airbnb. We've got some special guests there sitting behind me. Got the 2025 edition Squishmallows of Charlie and Warren. We're gonna have a pretty fun conversation today. We're gonna talk about Berkshire, obviously. I guess we should kick off with the biggest news that I guess probably most of the people watching will know about.
Yeah, I mean, look, the funny thing about this is Jason and I recorded a podcast purposefully that's not going to air until next week about the Berkshire meeting, where we made some predictions about what might happen and what might not happen. So I'm not going to spoil for anyone right now what we thought would happen at today's meeting, so you can hear it after the fact. But the thing we were speculating, wondering about heading in was, is this going to be Warren Buffett's last annual meeting as the CEO? And not in a morbid sense. We were just thinking he might want to step down at some point and take it easy. And we got our answer at the very end of the Q&A at today's meeting. Right before it wrapped up, he said he had one more thing he wanted to talk about. And he went on to say that he would be stepping down as the CEO of Berkshire Hathaway at the end of the year, turning the reins over to Greg Abel, who we've all known has been planned to be the next CEO for a while now. And he got a minute plus long standing ovation, after which he made a joke that level of applause could mean one of two things, and he preferred to take the charitable view of what it meant. But yeah, I mean, it wasn't surprising, right? The guy's 94 years old, and we were speculating about this, but it was still kind of weird to think like, oh man, this is it. He's going to be stepping down. All the big decisions are going to be in Greg Abel's hands. That could be potentially big news. I mean, they talked today we'll talk about this later when we get into the meeting, but they talked about a potential deal that they almost did recently. And yeah, those decisions will be Greg Abel's and not Warren Buffett's for the first time ever, starting in January. So yeah, big news. What was your guys' take, having speculated about it for so long, but actually now knowing the answer?
Tyler?
I mean, like I said, we kind of were planning on it actually happening, because this was like,
that's kind of the impetus for us going, right?
Yeah, we were like, we think he's going to retire, so maybe this is the time to come do this. And so, it's, I guess it can't be that surprising considering we planned an entire trip to Omaha on this very premise.
Yeah, no, I think that's exactly right. And I'll say this, I've been pretty consistent with saying for the past few weeks is I fully expected that this would be his last meeting as CEO. But I did not expect that the announcement would happen at the meeting. My thought process has been that, he loves doing these sorts of things, and he clearly kind of likes being the center of attention, but I don't think he likes for things to be about him. Right. And, I think the way that he did it is probably about the only way to thread the needle of the announcement coming out today, while also letting it not be, about him, by it being literally the very last thing. Because what typically happens at these meetings is, there's the first half of the Q&A, there's a break for lunch, and then there's the second half. And usually about a quarter of people don't come back for the second half. Or if they do, they might leave a little early, sneak out early to go down to the convention hall to do some shopping and that kind of stuff with all the subsidiary companies that have setups. So, and my guess is that this was almost certainly already known by the board and known by Greg Abel, Ajit Jain, probably some of the other high-level executives. My guess is that there were probably a half a dozen high-level people at Berkshire that knew. They might not have known until this morning. about it, but possibly sooner. But the decision was probably made, and Buffett was probably advised, let's do something at the end of the meeting, because let's give people a chance to recognize you in a public forum, right? As much as he wouldn't want it to be about him, because there was that, you know, he was kind of tongue in cheek, like you said, Jeff, but there was a pretty sustained applause.
Yeah.
There was obviously just like, thank you.
Well, and the funny thing is, you know, I was in the camp like you were, that I thought this would be his last meeting. I thought he'd step down, but I also thought he would just announce it with a letter that gets posted to the website, like he does a lot of things. And we were out last night at an event, and we ran into, or met up with, I shouldn't say ran into, we met up with Alex Morris from The Science of Hitting. He's been on the pod before, has a great website for people to check out. And he was convinced, based on the format change for the meeting, right? Because they dropped the video that they usually play at the beginning. They cut down the Q&A to be shorter than it usually is. And he was telling us he was pretty certain that all meant that he was going to step down at the meeting. And after hearing him kind of explain it, I have to admit, he kind of convinced me. I was like, you know what? That does make sense. And I promised him, because he's watching, I think. He said he wanted to check out the live stream. I promised him we would give him props for calling it. So, Alex,
So
well
insufferable.
You nailed it.
So insufferable, Alex. No, awesome. He did. He called it. You're right,
Yeah,
Alex.
he called it last night.
Nailed it. Yeah, that's right. That's right. And so here's a question I've got for both of you before I even say, what do you, so two questions here. Do you think that this timing makes sense? And then the follow-up to that is thinking about succession planning with Buffett and Berkshire broadly. What do you think this still, is there something that this doesn't solve for? Tyler, you want to go first?
Well, as one of the things that you kind of noticed at the meeting, and even from like 2 years ago, like it seemed like Warren had lost his fastball just a little bit, like answering questions with the shareholders and, you know, some of the ones that were mailed in. He was still sharp, and he still had some pretty good one-liners in there, but it was clear he was a little slower, a little
kind of wanders a little bit with it.
Yeah. Pretty. There was a lot of very meandering answers in there, and that, look, he's 95. I mean, of course, so that stuff is going to happen. So right. I'm not as concerned about the succession at the CEO level, and again, I guess we're going to be pitching Alex Morris's stuff more than we're going to be doing our own here. But he mentioned it last night too. Is a little bit of a succession crisis at the operating subsidiaries.
Yeah,
a lot.
That's my concern.
A lot of the operating subsidiaries that have been founder led or have had long time people at the helm who Warren kind of inherently trusted to run those businesses. Some of them are either stepping down to go do something else, or some of them are just flat out, passing away. Forest River, the boats and RVs passed away, and was just an example of like, there is probably a lot of like succession that needs to happen at the subsidiary levels to find leaders to lead these for the next 20, 30 years, if they even remain as part of the Berkshire portfolio. I know that immediately the moment that Warren steps down and is not really a big part of this business, look, I know it sounds kind of crazy, but the vultures are going to come, and people are going to be like, well, when are you going to sell this? When are you going to sell that? Like, what about these underperforming parts of the business? And without like a clear intention of like, hey, we have these businesses, we're going to find leaders for them, and we're going to like let people know who these leaders are. I think that's one of the biggest challenges Greg's going to have, because he's probably got a lot of like, not CEO, but I guess you could call like vice president of, division roles that he's going to have to fill in the coming years.
Yeah,
Yeah,
no, that's right. Jeff's fed.
No, I was just gonna say I agree with that. I think that's a really good point. One of the things I've been saying, I hadn't really given thought to that piece of it, right? The executive turnover other than the C-suite of Berkshire itself. Because I think that will stay pretty consistent for a little while here, right? As Greg Abel takes over and they still have Ajit Jain and Todd and Ted, picking stocks and things like that. I think there's a likelihood to see more substantial change when that group, turns over in however many years it is. But one thought I did have that, as I've been mulling it over the last couple of days is, look, Greg Abel's been with the company for 20 something years. He's the handpicked successor for Warren Buffett, but he's not Warren Buffett. And I do wonder when it comes to a deal, when it's him on the end of the phone and not Warren, is that just a different dynamic, right? Is a potential, deal maker on the other end gonna act differently, think differently, feel a little more emboldened to hold out for a better price, so on and so forth, talking to Greg Abel and not Warren Buffett? He just won't have the cachet, so that remains to be seen as deals get done over the next couple of years with Greg Abel in charge. But that's something I think certainly worth keeping an eye on and just kind of seeing how it shakes out. All right, we got a couple chat questions
Tyler
here.
had one more thing.
Oh, go ahead, Tyler. Sorry.
The mention of preferable deals. I don't know if Bank of America is going to be wanting to come to Greg when they need warrants and preferred shares that made Berkshire so successful, that company. Same thing with Occidental Petroleum. But I think the one thing that they will certainly have, and talk about like setting up your successor for pretty good success, giving him $350 billion to just, do what you need to do with. I know he joked. It was funny. He made a comment earlier in the meeting where he was like, I'm not saving this for Greg, or
Right.
But
right.
kind of maybe he was, because if it's unless he some giant deal comes across the table by the end of the year, which I don't know, seems pretty unlikely at this point.
Yeah, I wrote down the exact quote because I thought it was hilarious. He said, "I wouldn't do anything so noble as to hold back my own investing just to make Greg look good." And then he followed up by saying, "If Greg has any edge once I'm gone, I'll resent it." So, Buffett, he, just to your earlier point, Tyler, he did meander a bit. It took him a while to get to his point, but his points are still as sharp as ever. I think that's how I was thinking of it. Like if you took a transcript of what he said and just cut out the pauses and the uhs and the ums, it would sound like vintage Buffett. So he gets there. Just takes him a little while. But he can still, throw the zingers in there. And in that sense was just as sharp, I think, as ever. All right. We got some stuff in the chat here, guys. John Gallego says, "Hey, feels weird that Uncle Warren is stepping down, even though it makes sense." Yeah, agree, John. I think we're all in the same boat there. We met one of our listeners today, which was great. Wayne, who's in the chat right now. We met him at the meeting, said, "Hey," took a picture. It's on our social media. He says it's great meeting you guys at the meeting. But he also had a question, which is one we were talking about as we were waiting for the Uber to get back here. Wayne asks, "Does the stock take a hit on Monday? Could be a buying opportunity if it does." So, I'll just share my thoughts. And then Jason, you had a thought on this in terms of what might happen on Monday. To me, I don't anticipate a massive drop, if there is one at all, for two reasons. One, that I don't, other than Warren Buffett suddenly passing away so that there is no 7 months until the succession happens kind of a thing. I just don't think this is going to be that big of a market moving move. And to the point of it being a buying opportunity, maybe, but here's the thing. I think we're all in the same boat with this. The stock's pretty expensive right now for where it historically trades. And, let's say it's down 3% on the news. That's not going to substantially change the valuation, compared to where it historically trades. Berkshire bought 0 shares back in the last quarter, which tells you that they're looking at the stock price as being a little too pricey as well. So the only way I'd see that this news leading to a buying opportunity is if it led to like a double-digit drop, and I don't think that's in the cards. What do you guys think? Jason, you had a thought on this.
Yeah, my expectation is that it's going to move after the open, the pre-market and at the open. It'll move probably down. My guess is probably down. Because Buffett doesn't seem like he's, he doesn't have the fastball, but he can still locate the pitch, right? He can still put it where it needs to be. So he's still there, right? And his hand on that wheel is still super, super duper good to have, right? So I wouldn't surprise me for it to close down, but my guess is that by the end of trading, the stock is probably if it does go up and down, it's pretty quickly going to reverse once those who are looking for an opportunistic chance to maybe buy a little bit, turn the initial buyers into net, or initial selling into net buying by the end of the day. That's my expectation. And it'll probably end up directionally, whatever the market does tomorrow, Berkshire will probably be in that direction. Probably not as up if we have a big up day, probably not down more than the market if the market's down. That's my expectation, because again, his hand's still on the wheel. He's announced his intention to resign as CEO. I have consistently said that my expectation is that the cadence is going to be, he's going to leave as CEO. He's going to remain chairman. There's nothing that he said that indicates otherwise today. And him leaving the chairman role, I'm becoming more and more convinced he's going to just be a product of his physical inability to do it. And that he's not going to retire from that role. He's going to remain chairman until he's either too physically unable to do it or he dies. Like, I really think I'm starting to think that's what's going to happen. And then you're going to see the stock be more likely to move. Tyler, what do you think?
I'm going to commit a financial media crime and say I don't know what the stock's going to do on Monday. But
good. That's
as far
answer.
as far as buying opportunity, no, come on. That's predicating on a precipitous drop in the stock. If you're trying to gain a couple percentage points on a Berkshire Hathaway daily move, you haven't been listening to Warren, man.
Yeah, no, that's fair.
True.
I think that's fair.
John has a question for you, Jason. He says, "Are you trying to look like a younger Nicolas Cage from Con Air?" So I will read any comment that is about Jason's physical appearance. So thank you, John.
At this point, I think it's an older Nicolas Cage in Con Air.
Stop it. I was going to just lean in and take the younger. It's like, whatever. I mean, you're putting it in Nick Cage, even though it was mulleted Nick Cage. I was just going to lean in on the younger. All right, I'm just going to put on a hat. I'm going to lean into it here. Got some swag, picked up a few things.
So no one can tell what that is, but I believe it is a cowboy picture. A picture of Warren Buffett as a cowboy on a hat.
So this is from the Justin Boots and Justin Western Wear, one of the many brands in the Berkshire family.
So one thing we should say, because I thought one of the things that'd be fun to do for anyone who's never been to the meeting is sort of give a little info of what it's like to be here. And since Jason is showing off his swag, we can talk about that. So one of the things that is fun about coming here is there's a whole exhibit hall in the arena that are attached to the side of it that you can walk through, and they have basically like an exhibit hall you'd see at a conference, but it's all of the subsidiaries selling stuff.
And it's like the size of a Costco. It's a pretty big space too. Yeah.
Yeah. So we went by the Justin booth. You guys picked up some work gloves. We got some C's candy. All of us did. We bought some Squishmallows for our kids.
And some Squishmallows for the adults too.
Yeah. I have a Warren and a Charlie as well from this year's trip. So I got to find a place at home to display them behind where I record the pod so people can check them out. So yeah, that's one of the fun things about going through the hall, and they do a live, CNBC is in the hall too, in between the meeting, like on the breaks, they do live shots in there and interview shareholders and stuff. Tyler, go ahead.
The fact that so much of the stuff that is sold at this meeting has like Warren Buffett branding on it does not dissuade anyone from the fact that people that go to the Berkshire Hathaway annual meeting are cult members. I look, there's a lot of nice stuff in there too. And then there's a lot of like Warren Buffett and Charlie Munger kitsch. Because Squishmallows, hats, pampered chef, like full size cutouts of Warren Buffett in
wearing
an apron. Yeah. It is borderline cultish. And as much as we drink the Kool-Aid, even part of me was like, man, this is kind of wild.
Yeah, for sure. Hey, everybody, we'll be right back. But first, a word from our sponsors. FinChat.io is the complete stock research platform for fundamental investors. They have all the standard financial data on more than 100,000 stocks globally. But beyond that, they have company-specific segment and KPI data on around 1,800 stocks. So for example, do you want to see NVIDIA's data center revenue growth? They've got it. Do you like to track Apple's iPhone sales? They've got that too. Or how about nights and experiences booked for Airbnb? You guessed it, they've got it. And they just added around 8,000 ETFs and mutual funds to the platform. The breadth of FinChat's data is truly one of a kind. I use FinChat every single day as I'm researching the stocks in my portfolio, specifically when I want to see how they're doing on KPIs that FinChat is famous for. So to get 15% off any paid plan, go to finchat.io/unscripted. That's finchat.io/unscripted to get 15% off any paid plan today. The link will be in the show notes.
Investing Unscripted is brought to you by the Chit Chat Stocks podcast. My name is Ryan.
And my name is Brent.
And we're the hosts of the show.
On Chit Chat Stocks, we are constantly researching new stocks from high flyers to undiscovered small caps, diving deep into business models, debating competitive advantages, dissecting valuations, and we have a fun time while doing it.
Supercharge your investing research and start listening to the podcast today. You can follow the Chit Chat Stocks podcast on YouTube, Spotify, or Apple Podcasts. Follow the show so you never miss an episode. That is the Chit Chat Stocks podcast.
John also asks in the chat, did you guys get a chance to speak to Chris Bloomstrand at the Gabelli event on Friday? So yeah, we went to the Gabelli Value Investor Conference yesterday morning, which was really great. And Chris was on a panel that morning. We did not get a chance to talk to him because, as is often the case at these types of events with people who are well known, is as soon as they come off stage, they are surrounded by investors from all over the world who want to get a chance to ask them questions. And we did not get in that line to talk to Chris, but we're going to reach out to him. We're going to try to see if he'll come on the pod at some point.
I'm going to brag. I got to say hi.
Oh, all right. I didn't know that, Tyler. You didn't mention that to us.
Before
so you said hi and you didn't make the pitch to come on the show with us?
Well,
Crow, come on. All I do for you, and this is the thanks I get.
I knew we shouldn't have let him on this live stream. All right, other comments from the chat. Turk Hollinger says, let's hope the stock does not go down. I just bought a few shares for the first time on Monday. Just my luck. Turk, I don't think you have anything to worry about. One of the things that Buffett said today, actually, another quote that I wrote down that I think is relevant here. He said, if you're worried that your portfolio is down 15%, you need to get a better investing philosophy. And I think there's a little bit of truth in that in terms of when you buy some Berkshire shares. I don't imagine any stock move after this announcement would drastically change the long-term outcome of owning those shares. But I get it. You don't want shares to go down as soon as you buy them, as mine did when I bought Costco back in February. So
yeah, and I'm the master. You guys know I'm the master of I buy a stock and it's going to fall, right? It's inevitable that does happen in the near term, even though over the long term, my results have been far better than either one of you. But let's go on to the next comment here. Wayne had another comment. About the same time I was making that comment about, Warren maybe not having the fastball, but he can still locate the pitch, comparing it to Greg Maddux, the Greg Maddux of investing. I love that. I think that's really, really good. It's good to see.
Wait, hold on. Pause.
Yeah.
Pause. Speaking of Greg Maddux, and I say this as a Mets fan, if anyone has not seen the 30 for 30, I think it was, or the ESPN documentary on Maddux, it is, if you're a baseball fan and
it's fantastic.
If you're old enough to remember watching him pitch live, I cannot recommend it any higher. It's so good. Especially at the end, there's a a scene where he and Barry Bonds are in separate locations watching an at-bat they had against each other and talking through it. And it's, for a baseball nerd, super fascinating. So just wanted to throw that in there. Go ahead, Jason.
Incredible. One of my favorite things about Maddox that most people don't know, and there's a part of me that hopes that Warren Buffett has some of the same thing in him, is that Maddox is renowned for being like a ruthless trickster, and vulgar and foul and kind of gross. And like, I kind of hope Warren's that way a little bit too in private, just give me something more human about him. He's just so almost like an investing machine. Like if you could design an investing robot, that would be it. LDP saying hi to us too. Loving the Saturday stream. Don't get used to it now. Don't get used to it. This is a special occasion, right?
Yeah. LDP also pointed out that he said that's the difference between Berkshire and Tesla. If Musk would retire and the stock tanks 20% easily, what are your thoughts on the quote unquote false rumors spreading that Musk was exiting as the CEO? And he put false in quotes because it was reported and then it was refuted by Elon. Look, I don't know. Who knows what goes on with Tesla? There's so much swirling around it that it's hard to speculate. I'll say this: if the board of Tesla actually did start to look around for possible new CEOs, then as a shareholder, that would make me feel good, because that's what the board should do. If we're being honest, if they're a truly independent board, which I would question if they are or not, then they should be looking at, the market reaction to Musk's activities and say, maybe we need to at least look around, even if for no other reason than it maybe helps refocus Musk on where his priorities are. But who knows? I mean, unless there's some, actual proof out there that it did or did not happen, you have to kind of believe what you want to believe. But the idea of what I think about this one a lot too, in terms of a stock reacting to a CEO stepping down. I do think that if Musk stepped away from Tesla, that would be a pretty big market reaction. And I don't even think it would have to do with the future of the business necessarily, but just I firmly believe that some percentage of its stock price is just Musk itself, and the fandom around him. So I think some of that premium might fall off if he were to step away. I actually don't know that it would be material to the business in the long run, personally. But that's just me. I feel like I give him a lot of credit for getting to Tesla to where it is, but I feel like at this point, they could probably be as successful without him, but that's just my opinion on it. Curious what you guys think.
Yeah. So first of all, the rumors about the board reaching out to an executive search firm. Wall Street Journal, I'm pretty sure, broke the news, and I'm pretty confident that their sourcing would be solid. That's my expectation. I don't think the Journal would be willing to publish something like that without, they've got some pretty strong journalistic integrity. So my guess is that the rumors are probably based in truth. That's my expectation. I do think that the bigger thing there with Musk is, I think there's a Musk premium, but I think it's not just Musk as much as the stories that are tied to future bets, right? I think there's a good chance that the auto business would be far healthier without Musk there. Yeah, people are buying it for the future auto business. They're buying it for robotics and AI and self-driving robo-taxis and all of those other things that a lot of it is already baked into the stock price, right? So that's what I think is probably the more likely case. The interesting thing about Berkshire, as much as Berkshire is synonymous with Buffett, it doesn't have the same key man risk that Tesla does because of Musk, because of how decentralized their operations are and how good Weschler and Combs have proven to be as stock pickers. And having somebody like Abel that's come in and proven to be kind of a sound hand at the wheel and a pretty good capital allocator himself. So there's a lot of really, as Jane, of course, there's a lot of strength that I think is there that the corporate culture wouldn't change. And the people that are running the businesses are already running the businesses. Exactly like we talked about, though, that my bigger concern is, and I want to say, I brought this up, not Alex, first last night, about concerns about the silver tsunami at the subsidiaries. Tyler, I want to hear from you, but I want to circle back around to that because that ties to something in another event that we went to that I want to talk about.
Well, in regards to the Tesla thing, like, here's the fascinating part. And it all goes to corporate governance, because I think of the three of us here, I'm probably the one who shakes a stick at corporate governance way more than the other ones here. But look,
angry old man with a cane.
I am. It's fine. Like, spiritually, I'm much older than both of you when it comes to this stuff. But if this was like any other company, I'll call it like the Streisand effect, where it's like they put out the article, which, look, you could basically distill this whole article down to the board of the Tesla is doing its job. Like, that's their job.
Yeah.
And
even if they're just covering their asses, they're doing their job, right?
Or just doing normal succession planning in case, like, there's a plane crash or he gets hit by a bus or something like that. These are normal things that boards do, and the board could very easily have put out a message afterwards, be like, yeah, this is our job. This is what we're supposed to do, is succession plan in the event of an emergency. The fact that you have to walk it back like, oh, no. And, that we're spreading false lies. It goes back to corporate culture. Like, things like that are, to me, are horrible signs of corporate culture, that, your board has to walk back the fact that they're doing their job.
Yeah, exactly.
Yeah, no, that's fair. Can I share another tchotchke?
Oh my God, what is with you?
It's cool. Look at it. It's great.
We're at the point where when they give the results of the next quarter, they're going to have to cite you in the 10Q.
That's true. That's true.
As a revenue source.
Yeah, that's right. That's
They're going to start posting earnings.
Key customer risk. Jason Hall buying stuff at the hallway.
Top 10 customer.
Earnings X Jason Hall. All right, let's hop back into the chat here. Here's a fun question. I think 2 questions in a row here. I think you guys particularly will have some hot takes on. Turk says, Bill Ackman's pitch to turn Howard Hughes Holdings into a mini Berkshire Hathaway. What do you guys think? I have so many things to say about this, but I talked a lot the last time. One of you take this one.
Let me I want you to go off on it, Tyler. I just want to explain to people what Howard Hughes Holdings is, the starting point. So basically, it's a real estate business. They own a bunch of real estate and they develop real estate. Like, that's really what their core business is today. And it's, I guess, kind of a remnant of Howard Hughes. It's one of the pieces that was spun off of Howard Hughes's empire. There were lots and lots of other things, but Howard Hughes Holdings is mainly just the real estate that was part of it, right? Tyler?
Oh, did he freeze on us?
I think so.
Tyler, you there?
I'm here fine. You were kind of out of it for a minute there.
All right, we've fixed it. Go ahead. Give us your hot take.
All right. Look, the reason...
For somebody watching, we're literally in the same house right now, and we can kind of hear each other echoing around the walls, so we know nobody's dead.
I got these nice
headphones. We just don't know if
the
internet
or anything.
Ever not.
Yeah.
I'll do this so I can hear you guys.
All right, let the man speak. Let the man speak. Go, Tyler, go.
So, look. So, here's the thing. Like, I feel like every 5 to 10 years, somebody comes up and says they're going to be the next Berkshire Hathaway or something like that, right? They're going to use this as their way of becoming some vehicle to become the next Berkshire Hathaway. It's a great way to sell it. there might be another company that you guys have talked about rather frequently about being a baby version of Berkshire Hathaway with various investments. But specific to the Bill Ackman thing, this is what's is crazy to me about it.
So, I'm taking a flight from Omaha to Boston tomorrow, right?
Oh, gee, that sounds very familiar.
And I got here from Boston. So,
do you want me to go downstairs and smack him so you can talk?
Yeah, it might be fair. Look, not only is Howard Hughes Company a company that inhales cash, it's not a business that's throwing off loads of free cash flow like a textile machine or a textile company that you're running into the ground to milk it for cash so you can buy a bunch of other stuff. Howard Hughes, the entity, is a master plan development community, and it takes a lot of money to do that. And they just bought into a massive one outside of Phoenix that's going to take years, probably decades to develop and take a massive amount of cash. So how do you take something that requires cash to be your vehicle for Berkshire Hathaway? Number one. Number two, he doesn't want to run it like Berkshire Hathaway, where it's like a conglomerate and he uses the cash to invest in other things and people just are shareholders. He wants to take an asset under management fee. So you're basically just being private equity and getting your 2 and 20 on running this business. That's not a Berkshire Hathaway. The Berkshire Hathaway is not a collection of good businesses that throw off cash. Berkshire Hathaway is a business that is run on the behalf of shareholders in probably in the history of American capitalism, probably the most friendly to its minority shareholders and transparent to them in history. And I'm sorry, I've never seen anything for Bill Ackman that shows that he would conduct himself in the same manner.
Yeah, Bill Ackman's number one priority to me seems to be to get attention for Bill Ackman. That seems from my view, that seems to be what he's most focused on.
Well, and most of his enterprises, again, Tyler, this is going to sound familiar. Jeff, this is something you and I've talked more and more about, is incentives. Bill Ackman's empire, the incentives are on collecting assets, building the empire for the fee structures, right? So that's the key. And Wayne, to answer a question about just listening, no, Howard Hughes is not a REIT. Again, it's a real estate development business, but it's not a real estate investment trust. So it's not built as a cash flow generating pass-through device to pay excess
REITs
cash
have to
flow
make
back
money.
to investors. Right. Yeah, right. Yeah, exactly. So no, it's a very different business. And so Tyler was kind of poking at us about Boston Omaha, which I've given up on Boston Omaha. We could talk about Fairfax Financial, Tyler, right? The Canadian Berkshire, that I think generally has largely underperformed the market. The bottom line is that what Buffett has done is unique and difficult. It's hard to be successful allocating capital. I've talked about this before. Most businesses that are successful aren't successful because the people that run them are good at allocating capital. They're successful because whatever the business they have has some moats. It has some things about it that shield it from excess competition. It's in the right place at the right time, and it's able to stay there for decades, right? And the people that run the business are just really good at running the business. And it just so happens that works out so that any poor decisions they make around capital allocation don't screw up a good thing, right? Like getting a dividend policy in place, and so that excess capital disappears before management can do something done with it, right? Being aggressive and regular about buying back their stock all the time, like through high prices and low prices. Like we talk about it with retail investors. Most retail investors should dollar cost average, right? To make it a habit and do it all the time. So you don't screw up trying to wait for the perfect price and the market's gone up a bunch. And then, fear of missing out kicks in and then you buy at the top, right? We see companies do that a lot. They go through periods when their stock price is low and they don't really do anything. And then the stock price goes up because the business has been doing well. And then that's the only time they ever buy back stock is when the stock is expensive. So finding just good businesses that are durable, the ham sandwich model, right? A ham sandwich could run the business, right? And then they don't do dumb things with the capital, less than trying to do great things with the capital. And that's the thing that's unique about Berkshire that's so hard is they've been really good about doing great things with the capital. What I'm less convinced about is whether or not we might see some erosion of the quality of the underlying businesses. Because again, it gets back to incentives. The businesses are acquired to produce excess cash to fund that stock buying machine. And I do worry that as we start seeing that transition of leadership in those underlying entities, and it's no longer that first generation that stayed on after Berkshire acquired it, or maybe a second generation that was part of that, business before. So they still have that, they still think about it as a founder, where they think they want to build that legacy and that lasting thing. So where now you just have caretakers that are coming in that are less concerned about making sure that they're managing the business in a way that's going to keep it strong in perpetuity. And that's when this light touch for Berkshire to the subsidiary companies could actually come back to be a problem because of the way the incentive structure is built, and you start losing people that care as much, right? That are making the decisions. So I may be wrong and I may be worrying too much about it, but I think that's my biggest concern for Berkshire.
So sticking with Berkshire, but pulling in another company that Jason loves, John asks, I am curious if you have any feelings with Berkshire and Brookfield, if they'll be working with the US and Canadian governments to assist with the infrastructure needs with the energy grid needs in the future. So this is right up you guys' wheelhouse here. So why don't you chime in on that one?
Tyler, you want to go first? Or you want me to hop
Sure.
in first?
Look, we came to Omaha, we came to the meeting. I feel like I absorbed some Charlie Munger manna, and so my salty old man is coming out a little bit more. But I hear this and I think it sounds great on a press release, but it's just kind of what they do.
Yeah.
It's not any sort of political statement or infrastructure needs of the future. Berkshire owns a giant regulated utility, and part of their job is to go to regulators to with investment plans. And if you look at the investment plans at regulated utilities over the past, 15, 20 years, it hasn't been to build new capacity with all these big fancy new power generating facilities. It's more or less just been replacing existing systems in terms of, meeting power needs. A bulk of that spending has been on transmission and grid resiliency over the years. It's for probably 15, 20 years. Berkshire, Southern, Duke, you go up and down any regulated utility business, and that's all they've been doing is making grid resiliency stuff. Some have been able to do it better than others, and some have to, the amount of spending to do grid resiliency is way, way more. I think Consolidated Edison. Is it Con Ed? What's the California one?
Oh, so Southern California Edison?
Southern California Edison.
PG&E?
Yeah, that's right. PG&E. Those their grid resiliency costs are much, much higher because of wildfires and things like that. But the infrastructure needs for energy grid, that's just building transmission lines. And that's kind of what they've been doing for 20, 30 years. I think it just sounds good on a press release.
Well, I want to build on that a little bit. And this is something a couple of years ago I talked about a lot more, but it's still happening. And I think it's something that I have to bring up every couple of years and remind people about. So Berkshire Hathaway Energy is a conglomeration of 7 or 8 largely Midwestern utilities that Berkshire has acquired over the years and combined together. So Nevada, Iowa, Nebraska, Oregon, going all the way to the west. And typically if a business acquires a utility, they're buying it for the cash flow, right? It's just like you as an individual investor, if you're buying utility stocks, the implied promise is that you're going to own it because they're going to pay you that regular income stream, right? Berkshire Hathaway Energy hasn't paid a dividend to Berkshire since it was combined into one entity. Since they formulated this consolidated plan, it has not paid a single penny back to Berkshire, and probably won't for at least the next 15 years. They have a 25-year plan to invest largely in transmission lines. That's the biggest thing, but they're adding capacity too, especially wind and starting to step into solar. but they want to build the transmission lines because the idea is when the way the U.S.'s energy infrastructure is set up now, a lot of the power is going to be increasingly coming from the middle part of the country. The middle part of the country doesn't have anything like the infrastructure to get that power to the coasts where the demand centers are. And if you can be the gatekeeper of that, if you can be the one with that infrastructure in place, you're going to make a lot of money. You're going to make a ton of money, right? So they are preparing the business for that. And I mean, that's a direct service to like the long-term energy security goals of the US. I think it's a little bit different with Brookfield in Canada, because I think Canada, number one, is, what is it? I don't know, a 20th the size of the US. And its population centers are far more concentrated. And it's where it can access energy is a little bit more concentrated too. Yeah, it's got this kind of that same Midwest corridor, where there's lots of, wind potential, but it's a lot easier to have a coherent strategy when it's the equivalent of like California, right? Because that's what, in terms of population and what you're managing. And also you've just got a handful of provinces versus 50 states and all of the complexity there. So I don't think that Canada necessarily needs like a corporate partner to be part of that strategy. I think they have a better handle on it. And honestly, as an investor, in Brookfield, I want Brookfield to be focusing where they've proven to be really good. And that's everywhere in the world where they can get good quality assets for bargain bin prices because of things that other investors are worried about, that they have a better understanding of the opportunity and they're willing to take on the risk. That's where I want them sitting. I want them to continue to invest in 35 countries around the world where they see the best opportunities.
All right. So we got a couple more comments I want to make sure we get to in the chat. We got Sanith, I hope I'm saying that correctly, who wrote something really nice. After watching your podcast, there are so many positives, learning curves, which I adopted and am currently making in process of myself to prosper to a proper long-term investor. I wish I could read it. You guys are doing an incredible job helping a lot of people like me keep going. Hopefully I will meet you one day in person. It's my favorite podcast. And then wrote, if I were you at the age of 16, if we were us at the age of 16, I don't know. I don't want to speak for Tyler because I've not talked to him about this, but I know Jason and I talk about this a lot. I'd love to go back and tell 16-year-old me some stuff, particularly about things like you should buy Berkshire Hathaway right now, and hold on to it for the next 30 years. And then LDP's got a great point I think we should address. He says, if you're in the same house, then why are you not sitting next to each other around a table or something? Are you guys so used to looking at each other on a screen? Yes, fair point. If we had the technology to sit in one room and do this without terrible sound and bad feedback, we would have. But that's just not what we were able to travel to Omaha with. So we are in separate bedrooms. And
there's only so much production equipment you can bring in checked bags.
Yes, that's true. So I promise you, though, LDP, we are seeing each other in real life, not on a screen when we're not recording. So we want to make sure that people who don't watch this live and listen to it later have a close to normal experience in terms of how it sounds. So we decided to go in separate rooms. All right, guys.
Let me follow up on that really quickly too.
Yeah.
I think one of them, and I want to hear from you guys on this too, but one of my favorite things about this weekend so far is, going to the meeting is fun and it's kind of neat, but it's kind of a lot of sitting around and not a lot of action, My favorite thing so far is being able to meet some great people in the investing community that we see on social media, and some we've been able to have at our podcast, and we have DMs and that kind of thing together. But to be proximate with some people that we otherwise never would be able to get a chance to meet. Wayne, for example, who we've interacted with on social media a ton, and he's just as Sanif did here, is with a positive feedback. He told us the same thing, but having somebody tell you that in person, I'm going to be honest, that really pumps me up, Jeff. And I know it's the same for you, and it really helps supercharge me and, coming out the other side of this. Just, it's such a good reminder that we actually do make some positive impact on people out in the real world. So I really appreciate that feedback for people, but coming away, like having this time with people, I mean, not Jeff or Tyler, of course, but all the other people.
Well, it's,
right?
It's true. And Wayne said this to us when we met up with him at the meeting, that he's like, I don't have anyone in my friend circle that is an investor. So like, I feel like I know you
That's
guys
normal,
already
right?
because I've been listening, and we're the same way. Like, we have our investor friends, and luckily we have this podcast, and we have Tyler who comes on and does the videos on our page and everything. But outside of here, I'm going to go back home tomorrow and right back to my regular life where nobody else that I know is interested in stocks or investing. So meeting people we've had on, just virtually, meeting people in person is fun. We met a couple people this week that we're hoping to have on as guests in the future. So we made some connections in that way, and just being around a bunch of like-minded people is great.
I've got a Berkshire Hathaway meeting hot take.
Go ahead.
Sitting in those janky seats for like 5 hours listening to Warren Buffett actually is kind of like a low point of the whole time. Like, it's nice to hear it, but like when you compare it to like, going to the Gabelli Value Investors Conference and being able to chop it up with people there, and like going to other like social events at some of the local establishments here that are doing like either Q&A panels or doing just social gatherings and things like that. There's like a cottage industry around the entire Berkshire Hathaway meeting of, people in the industry just wanting to like catch up. And to be honest, those are like some of the best parts.
For sure.
The meeting itself, it's kind of a low point. Going to Warren's favorite restaurant, kind of a low point. But all the other stuff's pretty good.
A high point. Another high point for me was Pat Dorsey buying me, I think, 4 really good whiskey drinks. He doesn't know he did. So if anybody has a connection with Pat Dorsey, tell him I said thank you very much, and we'd love to have him on the podcast so we can thank him in person.
Yeah. The last thing I'll say about this, and then I want to pivot to our portfolio contest for the last couple minutes here so we can make fun of Tyler. The last thing I'll say is
this is going to make Jeff's weekend. He just wanted to be he wanted to drag me onto a live show so he could drag me through the mud because I had a bad portfolio.
Because you had a bad 3 months, like 4 months, like that's how ridiculous and petty that I am. Yeah, we only invited you out to Omaha for this moment. No, the last thing I'll say is, there's so much financial noise out there, and there's so many, people on social media and newsletters and podcasts and YouTube channels, and and there's a lot of really good ones like ours, for example. But when you finally meet the people and see them in real life, it just reminds you like this is still a human endeavor, and we're all trying to do things that we enjoy and learn from each other, and it's cool to meet up with everyone in person. All right, so the contest, we're not going to do a deep dive into it here. We typically don't on the monthly recaps, but I purposely wanted to make sure we talked about this because I'm making a little bit of a comeback here compared to you two guys. I'm going to pull up the spreadsheet. We are currently, let's see, Jason's as of the close on this Friday, so a little bit into May. Jason's down 4.1%. I am, let's see, I've ticked into positive territory. I'm up 0.9%.
Almost 1% up. Yep.
Yep, almost. Tyler is down 11%. And all kidding aside,
I'll wait for the dividend calculations to come in at the end of the year.
No. Yeah, that's true. It will get updated with dividends at the end of the quarter. But all kidding aside, I don't really want to bust Tyler's chops because it really only has been 4 months, and he's a great investor. But Tyler, you did mention, as I was teasing you earlier before we recorded, that you thought you actually did make some mistakes in picking these stocks. I wanted to give you a chance to defend your honor here live on the show.
There was definitely some things I didn't see coming. Tariffs on agricultural products, having a significant portion of the United States' soybean export demand getting wiped out with the axing of U.S. aid. There's a few things related to soybeans that I didn't see coming. Maybe that's me trying to come into a market that I wasn't 100% prepared for. And yeah, like there's a couple others where I'm just like, maybe not. But, that's kind of the whole thing is you turn over a lot of stones and sometimes you find cockroaches and sometimes you find gems.
Yeah, for sure. It's also interesting, I saw a stat the other day because the market has had a nice little run the last week or so. I believe we are back, the market itself to the pre-Liberation Day levels. So we've clawed back all of the tariff losses. I don't think it's going to stay that way. I guarantee there will be more uncertainty in the future. That just seems to be the world we live in. But I don't check in on this portfolio. Go ahead.
I'm going to push back a little bit because it's not all because you have to remember that the market peaks in like mid to late February. And then Trump announced the tariffs on Canada and Mexico. Yeah. And that's when the market started falling. So we're still down.
Yes.
I mean, we're still down from that peak.
Yeah. No, I know. I'm just saying I'm noticing it in the results of the portfolio last month to this month, right? Where like a little bit of recovery in our stocks. And I only mentioned the stat about Liberation Day because I just heard it the other day. We are not back to where we were before all of the tariff talk, but since the, whatever it was, April 2nd announcement.
Fun little anecdote on that too. You guys probably might remember this from Gabelli because the CFO of Union Pacific was there. It was talking about like, our cargo loading of intermodal, which is like the container ships that get off ships. She was saying it's like, it's been really, really busy these past few months. And a lot of it being like front running deliveries before tariffs come in. And she was like, we're doing awesome right now, but like a few months out, we're expecting things to drop off pretty precipitously.
Well, yeah, there's a stat that I can't remember where I read it, but something like 30% of the volume, like available volume coming out of China for later this year is still unreserved.
Yeah.
Right. That's huge. That's huge. That's tariffs, right? So there could be some serious implications for some of these logistics companies.
And we're not far from it. I mean, just this past week, I was reading multiple articles about how we have about 2 or 3 weeks left before the ships stop coming and the trucks don't have anything to haul across the country and prices start to go up and shelves start to run bare as the impact. Because there was this huge front run, but that's going to be over. And that's without, that's going to happen whether this all gets walked back or not, because, there's such a long lead time on all this stuff. The time between when it lands on the shelf for you to buy it and when that order was placed and the wheels were put in motion to get it here is months sometimes. So, if it all got walked back tomorrow, we're still it would be a short-term point of pain, but we're still going to experience that as this kind of works its way through the system. And then obviously if it doesn't get walked back, it's just going to persist as time goes on. So the next couple of weeks will be interesting in terms of all of this shipping and trucking data, and then also what we see on the shelves. All right, couple comments here as we wrap up. LDP following up on our explanation of why we're in separate rooms while we're in the same house. He said that's great dedication to the podcast. Thank you, LDP. That's the goal here. Wayne is shouting back at Tyler here saying, come on, Tyler, it was Uncle Warren's send-off, as Tyler pointed out. That he thinks the meeting is the low point.
If I was there for the last 20 minutes, it was great.
True. Fair point. And Michelle, whose last name I will not say on the air, says she's checking out the end of the live show while at work. So
That's right.
We won't say anything. Thanks for joining us, Michelle. All right, guys, 2 minutes left before we wrap this thing up. Let's do some final Berkshire Hathaway annual meeting points. Tyler, go first, then Jason, and then I'll finish us up.
Long silence. Great for podcasts. Great for media. I really do enjoy coming to, as much as I was making fun of it. I do it in jest. I do love coming to these, and for all the reasons, coming for the events, coming for the ancillary events, coming to hang out with you guys for a few days. It's a good time. I hope we get to do more of these and do live stream podcasts after. I don't know if we'll be as big of news drops when we do them, but we might be some of the first podcasts to actually discuss this. So good for us. But otherwise, no, I loved doing these get-togethers.
Yeah, agreed. Jason.
Yeah, same. I don't really have much to add besides that. I've already kind of said how I stand on that. I continue to be optimistic about Berkshire, its structure. The concerns that I have, they're like edge case concerns. But being able to have these conversations in real time with people is rare. And I really cherish these opportunities to do it. And I'm glad we get to do the live stream too and bring folks that aren't able to be here in person a chance to kind of feel like they're being a part of that too. What about you, Jeff?
I am not the kind of person who lionizes people or has heroes or people I look up to. There are very few people in the world that I feel that way about. And look, I've read enough about Warren Buffett to know that, like any human being, he's not perfect either. But there's an aspect of the way he approaches running this company that is so different and so unique and so of a different age and so probably not going to be seen in the future that it is sad to see him step away and just kind of be at the end generally. And it's fun when you're in the arena and listening to him talk, the remarkable consistency with which he sees the world and thinks about the world, even as he's changed how he invests and thinks, about a lot of things over time. So I just think, I'm happy for him if this is what he wants to do. It's just a sad day. And I feel like as someone who kind of only got into all this 5 years ago, I feel like I really missed out on decades of what could have been a lot more time enjoying, Warren Buffett and his contributions to the world of investing. So a little bittersweet for me, but happy to be here.
Showed up at the dance for the last song.
Yeah, basically that's how I feel. So appreciative of that last song though. So, all right, Jason, wrap us up, man. We're at the end here.
Yeah, this has been great, guys. Thank you so much for being flexible with us and joining us on a Saturday. Don't get used to it. Those of you that prefer it, this is not going to be the normal thing for us. But that's it. Just a reminder too, we love having our conversations, sharing our thoughts about these things. And just remember, we're not giving anybody advice, telling anybody what to do. You guys can make your own decisions. You have to, and you have to own them. You can do it just like Warren Buffett. You can do it until you're 94, maybe even longer. All right, everybody. Have a great rest of your weekend. Jeff, Tyler, we'll see you around.
All right. See you guys.
See you guys.